Hey guys, Boris speaking at Forex. Welcome to the weekly technicals for the crosses for April 16th to April 20th, 2018. And this week we focus on trends. There are actually been some very persistent trends in the crosses. And this week they came to fruition, a couple of very key crosses. So I want to focus on a couple of trend pairs and see if we can find some interesting points of entry as next week takes place. Let's take a look at what's on store. Really, the big story this week on the crosses was the Aussie Kiwi continued downward trend with 107 resistance. Now we came to this 105, tested it, bounced back up, and next week will be a really key tell. If we can get strong Kiwi data and sort of a blasé attitude out of the RBA, we could break this 105 level for real, and then we're on our way towards testing multi-year lows around 103. So it's very, very interesting. There seems to be kind of a market recalibration of interest rate policies between Aussie and Kiwi. If we see RBNZ moving towards tightening while RBA stays stationary, there's every possible possibility that we could see parity sometime before the end of the year. So it's really worth watching this trade. I like this as a continuation trade here. Euro pound, of course, was the big story. That was the primary driver for pound strength this week because we broke this very key support level at 87. But the question is breakout or fake out. That's going to be, I think, a key tell next week. If we can't break the 86s, I think and UK data comes in weak, we're going to get a recovery right back up above the 87s. This, in many ways, is going to be the cross to watch as far as movements, because now we have a lot of late shorts that could have bet on a breakdown that could get trapped very badly if pound data comes in weak and euro pound comes back up above the 87 level. And then sort of the last trade here is really a bet on bullishness of Bank of Canada, hawkishness on their position, because EuroCAD, again, this is sort of a trade on the disparity between monetary policies. If the Canadian policy turns more hawkish while the European policy we already know is relatively dovish, we have this very strong trend that could now break down below the 154 level. Let's take a look at the charts and just see exactly how they're lining up. So here's the EuroCAD, the last pair. You can see a very, very clean trend. We're just walking the Bollinger Band all the way down. We had a bounce back day today, but these type of bounce back days within a trend are actually extraordinarily good entries for a possible reshort of the position. So I think anywhere we can get up to around 56, 56.50 over here ahead of the BOC on the assumption that they're going to be hawkish could present us a pretty good, interesting trade here for back to the downside. The 154 is the key level to break, and that could go on Wednesday if the Bank of Canada is hawkish, as we think there are. So that's EuroCAD. Here's Aussie Kiwi, another very, very strong, very defined trend. We did find key support at the 105 level. So here, this becomes very difficult kind of a trade. You can trade it both ways. You can sort of say, well, you know, I'm going to wait for the 105 to get broken again because I'm just going to do a momentum sell and then assume that hopefully we're going to go down to the 104s. Or you could try and do a retrace sell back into the sort of the 106, 107 channel on the assumption that we are going to turn back down, maybe not in a day or two, but in 3 or 4. I don't think this is the final bottom. I don't think so. But, you know, you really want the price to kind of tell you. Probably if you want to be extremely convinced that this downtrend really continues, you probably want to break. You want to sell the break of the 105s rather than try to get the retrace here, because the retrace here could quickly turn into sort of a long-term bottoming formation unless we get the market convinced that there's a clear disparity in the monetary policies between the two. It's not quite clear yet, so I wouldn't want to forecast the fundamentals. I'd rather have the technicals tell me that my position is right. So I probably would want to wait for a break of the 105s to have the continuation trade here. And then here's the last, but definitely not the least trade. Look at this break. We took out 87 was been a hold for a good year. We broke it this week. That was the primary reason for why pound ran. There was really no other reason why pound got squeezed up so hard. But we bought it back up. Today is actually, look at this candle. This is the Friday candle as I'm showing it to you, and it's a nice looking wick. This could potentially be a tradable squeeze back up to the upside, which means that the cable goes down and euro pound could trade back up towards the 87, sweeping up all of those late shorts who broke it into a potential squeeze the other way. So I think it's a decent enough, small enough risk to maybe want to give it a punt to try to bottom tick this thing and see if the turn really does indeed trade its way back up towards 87. 87 then will certainly be pretty serious resistance. I don't know how much more beyond that it could get at this point, but it bounced back from here to 87 seems a little reasonable given the signature that we left on the price action today. But we'll be watching it very, very carefully. Of course, if we break the lows here, it's all bets off, and then the continuation trade really could accelerate because there's nothing down here for quite a long time, right? There's nothing. Once we break this level here, we really got no support until effectively 85, right? 84.50. So you have like almost 100 points of a free fall here, and that could indeed happen. So don't don't fight the trend if the lows are given. But as long as the lows hold here, it could be an interesting turn trade into the start of the week. Wish you guys the best of luck, the best of trading. Boris, over and out.